Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stocks for Breakfast. Thank you so much for joining me. Today is Wednesday, July 8th, 2020. I wanted to congratulate everybody who joined the boot camp this week. We continue to trade this one stock that just keeps paying us over and over and over again. Yesterday it exploded and it's actually up again pre-market this morning. So you made a great investment in yourself. Congratulations. If you're interested in joining the boot camp, if you're interested in finding out how other traders are doing and what it's all about and everything that's included, you can click down and grab the link below. No pressure. Just if you want to make the investment and you're finding it challenging to make money in this market, we're doing a really good job. And what's most important, I think, is the community itself is really helping each other, which that's really where you want to be. You want to be among other people who have the same desire to see other people succeed as well as themselves, because you start to give, and then all of a sudden everybody's amplifying how much money you could make together. So it's kind of exciting, which actually leads me to today's topic. We're going to talk about the disciplined trader. We're going to talk about what it actually takes to make money consistently, to see your trading account go higher and higher and higher. It's not hard to make money when it's obvious. What's hard to make money is to make money when it's not obvious, as well as learning how to avoid and ultimately eliminate those trades that you know you shouldn't be in the first place. We started to get a little bit of questions yesterday around wanting to hold losing trades. And it just honestly, it just boggles my mind. In my opinion, there's really no reason in the world to hold losing trades. But I will tell you this. There is a difference between you initially put the trade on and it might not be working out and you're not quite stopped out yet, versus holding a trade that's clearly not working out and you're just basically hoping that it comes back. And look, everybody's done it. Anybody who says they haven't done that is full of beans. Everybody's done it. However, nobody will disagree with the fact that if you continue to hold losing trades, that you're not going to make money. You will not get paid if you can't get out of trades or choose not to get out of trades, which I'm actually going to call somebody out in the community yesterday who sent me a direct message during the day saying she couldn't get out of the trade, which is total bull. You didn't want to get out of the trade. There's a difference. There's a difference between putting on a trade and working in order, putting on a trade and it's not working out, and the distinction between those two things. And first of all, the number one way to fix this is to have better timing. Enter your trades at better prices. Enter your trades where you're anticipating getting into trades at the best price, as opposed to just chasing price action, which quite frankly, a lot of these stocks have had really amazing price action. But if you're getting in 7 days after the stock started to move and you want to hold a swing trade, you're going to have a losing trade. 9 times out of 10, again, exaggerated numbers, but 9 times out of 10, if you bought after the stock rallied 7 days in a row, and you're going to have a losing trade. There's no other way to put it. You're letting fear of missing out overtake good trading sensibility, good trading concepts, good trading discipline. So I can't stress this enough. There's 3 factors into being a disciplined trader. Actually 4 if we add to the other side of the trade. The first one is choosing the right trades. And that's obviously what I specialize in, choosing order flow, obviously recognizing how to read the tape, reading momentum within the context. But you need to identify which trades have obvious directional bias, which again, the way we call it is order flow. But then you have to learn how to time entries into those trades in a way that when you put the position on, you're going to have minimal downside, if any. Because look, nobody's going to get perfect timing all the time. But we try to. But here's the thing. You don't need to go in with your entire trading size on your initial entry. That's part of being the disciplined trader. You don't need to say, well, if I want 1,000 shares or if I want 10 options contracts, whatever it happens to be, you don't have to buy all of them at the same exact time. Work the order. Put the trade, especially if you're looking to hold the trade for a week or 2 weeks or a month or whatever it happens to be, you don't need to put the entire trade on at once. Do what you do the same way when you get out of a position, where a lot of people scale out of a trade. They don't get out of the entire thing, which quite frankly is smart too. You let some of the rest of the position go and you make some extra profits on that last piece, but you rang the register. So number one is you can learn to work the order into the direction that you want to put on. Number two is understanding how far the stock has moved. So I want to make sure I cover that in clear. You don't need to put the entire position on at once. If the trade starts to move against you, you need to absolutely have a stop loss. If you put on a trade and said, I'm willing to risk X amount, and it goes down to that area, I'm out, the trade's not working, it's imperative in the long run that you do that. I can't tell you how many people join the boot camp and all of a sudden they're like sending me pictures from their iPhone of all the trades that they're in losing positions, telling me that they don't know what to do. That's honestly, that's bull. You know what to do. You need to stop being married to the position, reduce your share size of those losing trades, or get out of those losing trades so you get your mind back and you're not stuck mentally in a losing portfolio. Now, here's the thing. They're like, well, I don't want to lose my position. Lose what position? You already lost. You're losing money already. You could put the trade back on when it starts moving in your favor. Why can't you get back in if you take the loss? That's smart trading. It's going to take one trade where you don't have discipline that doesn't come back and you're going to wipe your account out. I'm telling you, it happens. I've seen it happen. Quite honestly, I've done it early in my career, way back in 2000, 2002, when I didn't know. I really thought that the stocks always just come back. It doesn't work that way. I am telling you, if you want to have your account grow steadily, month after month after month after month, you need to eliminate unforced errors. And that has to do with timing, it has to do with how you work your orders, and it has to do with being disciplined to get out of trades that aren't working. Stop having emotional baggage to a trade that you said it's supposed to go up. Everybody I know is making money, which first of all, that's very often BS too. Worry about your account. Worry about whether your account's going higher or not. Don't worry about what anybody else is doing. And also, don't worry about missing a trade. Honestly, the market's going to open tomorrow. There's other opportunities. You are so much better off getting back to cash, lowering your exposure. And if the trade starts working out again, put the darn thing back on. You can't make money in the long run saying, I'm afraid of getting out of a trade because then it might continue back in the direction. And I think more specifically what I'm talking about today is swing trading. I know a lot of what we discuss is day trading ideas and whatnot, but swing trading ideas, especially because of the overnight risk where stocks can gap against you, the losses just become too big. And there's, quite honestly, there's no reason for it. So active trading means you have to be an active participant in the idea. Now, you might not agree with me, but I'm telling you what I'm telling you right now works. If you don't have discipline, and especially if you can't be in front of your screen all day, every day, then you need to learn how to time your entries a little better. So we're going to work on, we're just going to look at a couple of stocks to determine how you could have gotten into the stocks in a little bit of a better timing perspective, and then what to do in those stocks as they start to move in your favor. But here's another thing too. You need to know, what do you plan on doing with the trade after you get in? Just saying, I hope it goes up, that's not a plan. I hope it goes up, and I have no idea what my profit target is. I have no idea where I plan on getting out. I have no idea what a successful trade looks like. That's why you need to join the boot camp. That's why you need to be around other people. You need to understand how to put the trade together from start to finish. So many people just want to buy. So many people just want to be involved. So many people are just, I'm missing out on great opportunities. Yeah, you are, but you still need to understand how to interact with the market. And here's the thing. A lot of people are feeling fear of missing out on these explosive $5 stocks right now that are becoming $15 and $20 stocks in 4 days. That's great. And if you could take advantage of that with us, which we had some of those yesterday as well, amazing. But you want to be able to take advantage of any type of market. You don't want to only be involved in these markets where these small stocks happen to be in play, and they're great. You can take advantage of them, make money while they're available, but you want to be able to look at any market and say, I understand what I'm looking at, and I expect to make money. That's where you really become the asset that produces money. So we're going to go to the charts. We're going to look at a few examples, and then we're going to just really drill the point home. So obviously, I'm going to start with the market. We're going to start out with the SPY, and clearly some different opportunities here, right? So a lot of people don't like to short sell. In this window here, obviously this was bailed out by the government. The government stepped in. There was a stimulus package in this window here and turned things around. So what happens now, instead of being disciplined when things start to go down, you're basically hoping stocks come back. And yeah, it did. But if the government didn't step in, this would not be happening. You could Google anywhere about the stimulus package, and you'll see that the reason we are not going down right now is because there's a $2 trillion stimulus package holding up the market. That's not what you want to rely on. You want to rely on your skills, okay? If you doubt that, ask anybody who traded through and lost a fortune in 2000, 2008. Yeah, eventually it came back, but you're gonna risk 2/3 of your portfolio when you're about to retire. That's just flat out dumb. It's dumb to put that in your mind to say it always comes back. What if you're 2 years away from retirement? What if you're a year away from retirement? You're gonna let $1 million become $150,000 and you're gonna go work at McDonald's? That's dumb. So anyway, in the market itself, okay, you need to recognize when it's obvious and be aggressive in the direction of when it's obvious. You need to recognize when it's not doing what you want it to do. You need to recognize when the edge is very small. You need to recognize when the edge is strong. You need to recognize when the edge is small again. And if the market itself has a tiny edge, then you start to work your way into stocks that have better opportunities. Now, we're just going to use this one as an example because I don't want to go over 50 stocks because I'll probably put you to sleep at this point. But this stock has been one that we've been honestly printing money in. Every single day we've been finding opportunities in this stock, and some people have been doubling their trading accounts just trading this stock. Let's talk about when you could have gotten involved, because it's very easy to say, I missed it, right? Very easy. And I'm going to say that's BS as well. Honestly, if you've been involved in the market, if you've been, especially if you're a regular viewer of the channel and you're watching some of the trades that we're calling out, the stock had a momentum move and then paused for a week and a half. You can't tell me you couldn't get in. Then it had another momentum move and then paused for a week and a half. Then it paused for 2 days before it exploded, and now it's actually up $9 again as of right now. So the point that I want to get across here is that anticipating your trades is a monster part of getting better entries. Knowing difference, anticipating getting into your next trade, but definitely knowing what trade management looks like is what makes you a professional. And again, I want to emphasize this to end the video. At the beginning of your trade, you need to have an idea what a profitable trade looks like. You need to have an idea of what a unprofitable trade looks like, and you need to understand how you're going to manage both of those situations. If you ever tell me I'm stuck in a trade and I can't get out, I'm going to laugh at you, because you're choosing to not get out. You're choosing to act like a child and not get out of the trade because you don't want to take responsibility for your success. I'm telling you right now, that will never work. You know what's going to end up happening? You're going to keep putting more money in your account, and you're not going to end up learning from any of the losses that you had. So it's kind of like tough love today, but the disciplined trader is what we all need to be. And that discipline includes holding trades. That's the opposite side of it, right? So anyway, sometimes you can feel I'm a little frustrated that people want to hold on to older baggage that come into the boot camp. And it's my job to break you out of it, which is the whole reason why you invested in yourself to get in there in the first place. So I hope this video helped you. I hope it spurs some kind of thought process. And really, to sum up the whole thing, if a trade's not working out, scale out or get out. You can put the trade back on. Think about this. If you bought it here and it's down here, what are you holding on to? You're afraid the stock might go back up to your entry price? Get out, scale out, and get back in at the same entry price. Why would you put yourself in a situation where you're holding on to a losing trade that could potentially become a much bigger losing trade with zero commissions today and the ability to get in and out at the same price? It's just flat out dumb. It's just flat out dumb. I'm going to call it what it is. Get in the boot camp. Ask me questions. Ask questions below the video. Subscribe to the channel. There's so many different ways you can contact me. But please stop holding losing trades. The choice is yours. Do it. Have a great day.